All right, guys, time for a new edition of the blog. Yeehaw, that's right. All right, guys, today we're going to talk about a few different things. Now, those of you who don't know who I am, most of you do, Jim Montrym, the guy who provides the pre-licensing, PE education, 20 hours. A lot of new people getting in the industry. I'm the guy to come to. Make it fun, make it interesting, and pass the test. Also, don't forget, a lot of you have to do your 8 hours of continuing education every year that have a license. I'm also the guy doing a lot of those classes right now. Check out our website. And here's the deal, guys, how this works. I'll go through the material for about 5, 6, 7 minutes. At the end, I'm going to ask you a question about the material. Quick question. If you email me back the answer to the question, I put you in a drawing for free continuing ed. Free, F-R-E-E, the best word in the mortgage industry. And again, I want to thank you guys. Literally, hundreds and hundreds of responses. A lot of these questions and stuff I'm coming up with, frankly, come from you. So I appreciate your input. If you got something you want me to talk about, let me know. If I think it's good, I'll put it on there. But that's how this works. Okay, topic number 1 for today. Let's talk about this. This went into effect in July. Okay, our typical federal government in Washington, D.C., they're funding our highways, right? 3 months at a time. That's a great way to fund your highways, all right? And what they did, guys, back in 2011, remember when they had the 2% income tax or the FICA tax reduction? Well, you say, how did they pay for that, Jim, that reduction in the taxes? Well, they added 10 basis points, 0.1% to what's called the G fee. What's the G fee? That's what Fannie Mae and Freddie Mac require from lenders when they sell loans to them. That's how they raise money. And that 10% basis points, G fee, is going to last until 2021. And that was there. Now, they were proposing in July, when this highway funding came up, to increase it to 40 basis points. Oh, yeah, we're going to pay for roads based on people buying mortgages in the United States and owning homes. Well, they got shot down. The good news is the G fee is still 10 basis points until 2021. Thank Mitch McConnell from Kentucky. Fought it like crazy. Good job, Mitch. Way to go. All right, now, what we're going to talk about, guys, is something connected to that. Now, starting in December of 2016, when you get your 1098, that's interest on a home mortgage loan, the lenders are required to report to you and the IRS. Up till now, it's just been the amount of interest. Well, come 2016, when you get your statement, it's going to be a little more information added. What are they going to add? Okay, number 1, they're going to include on that statement the outstanding balance, how much you owe on that mortgage. They're also going to include the year the mortgage was originated, and thirdly, the address of the property. Now you say, why are they adding these additional things? One reason, boys and girls, revenue. Oh yes, we need more to spend in Washington. We had record revenues, the most the federal government ever took in last quarter, $2.3 trillion, but that's not enough for our current president. We need to give more free stuff away. All right, so why are they doing it, guys? And the reason is this, guys. You realize if you get a house over $1 million, okay, the interest above $1 million home is not tax deductible, okay? So that's why they want to know what you paid for the home. And then also, if you ever refi a home mid-year, okay, and you pull out more than $100,000 equity, the amount above that, the interest is also not tax deductible. So again, it's all about limiting that because some people were claiming the full deduction on houses over $1 million, claiming the full deduction when they took more than $100,000 equity out on a loan. This is to create more moolah for Uncle Sam, okay? So again, that change is going to go into effect December 31st of 2016, okay? Boys and girls, let's talk IRS, ERS. We just had a big winner at the track this year. I had to declare taxes, but I'm going to have enough losers to easily compensate for it. Okay, now here's the deal with the IRS. Along with that highway funding bill, there are a couple little other tidbits added that I think are interesting that we may want to talk about. Now, basically most of us know the IRS, if they want to audit you back in for taxes, 3 years. After 3 years, pretty much have to leave you alone. Now, the only exception to that rule is if you grossly understate income by more than 25%, then they can go back for 6 years and audit you. Now, here's something they're doing now. They added to that where they can go back 6 years, the following scenario. if you grossly underestimate the cost basis of something. In other words, you buy something, okay, years ago and you sell it and you got a capital gain, so you jack up the original price. They won't know what I originally paid for it. Increase the original price so I don't have to pay as much capital gains. Well, same rule applies. If you underestimate the capital gain by more than 25%, they can audit you your taxes for 6 years now instead of 3. More revenue for Uncle Obama. Yeah. Okay, guys, finally, I'm going to lump this into topic number 3 and 4. All right, here it is, guys. Now, you've been reading probably CFPB about marketing service arrangements, okay? Typically, you're trying to get more business into your company, so you work out a deal with somebody, where they go out and market for you, and you pay them some money, or you trade them this for that. Well, I got news for you. Marketing service arrangements are not okay by CFPB. Now, under RESPA, a violation of RESPA is when you exchange things of value, money, sports tickets, blah, 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 all right? Now, what the CFPB is basically issuing is saying this: a marketing service agreement or arrangement in itself is a thing of value, violates RESPA. They don't like marketing service agreements, okay? To me, it is very close to the affiliated business arrangement we had years ago. They are very popular in the industry, but CFPB is looking for them. I would steer clear. My advice: mortgage guy gets paid for mortgage, real estate for real estate, insurance for insurance. That's how they're interpreting it. Very close to the vest. Finally, one last thing, guys, I'll throw out to you. FHA, a proposal, not in effect just yet, but a proposal FHA is throwing out there is they're saying this. They're basically saying now if you're a lender and you have a claim, an FHA mortgage goes bad, you must submit the claim to FHA within 3 months of either A, getting basically marketable title back, you finally get the title to the property back, or B, you sell the property, okay, basically foreclose and sell it. You must file your claim for reimbursement on FHA's program within 3 months of that happening. Okay, that's the blog for today, guys. Here's the question. Here's the one for the free CE, boys and girls. Okay, if you grossly understate your income or grossly overestimate the basis of an asset, how long can the IRS come after you and look at your back tax returns? How long can they go back and audit you? Hey, I want to say thank you, guys. Once again, I appreciate it. The best thing you could do for me, guys, is send this blog around. It helps my business. I appreciate the comments. If you could blast it around to your friends so that they look at it and they respond, you're doing yourself, them a favor, and me a favor, and that's the best compliment. So again, once again, guys, thank you very much. I'll see you in a couple weeks, and remember, man, we don't look at your past, we credit your future.